Ladies and gentlemen, you're being connected to the Linc Limited Q2 FY23 earnings conference call. Please stay connected. The conference will begin shortly. Ladies and gentlemen, you're being connected to the Q2 FY23 earnings conference call. Please stay connected. The conference will begin shortly. Thank you. Good afternoon, ladies and gentlemen. Welcome to the Linc Limited Q2 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the management's opening remarks. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Naveen Agarwal, Head, Institutional Equities at SKP Securities Limited. Thank you, and over to you, sir.
Good afternoon, ladies and gentlemen. It's my pleasure to welcome you to this earnings conference call on behalf of Linc Limited and SKP Securities. We have with us Mr. Deepak Jalan, Managing Director, Mr. N.K. Dujari, Director Finance, and Sanjeev Sancheti, Reuters Advisors LLP, the IR advisors to the company. We'll have the opening remarks from Mr. Deepak Jalan, followed by a Q&A session. Thank you, and over to you, Deepak ji.
Thank you, Naveen. Good afternoon and a very warm welcome to Linc Limited Q2 FY23 earnings conference call. I will take you through the business and operational highlights of the quarter gone by, while our CFO, Mr. Dujari, will share the financial metrics. I'm pleased to share that Q2 FY23 has been a landmark quarter for us, as we have achieved the highest ever revenue and profits in the history of our company. While Pentonic sales continued to grow, Linc revenue also posted strong growth. Further, export revenue also experienced good growth on the back of higher volume and a stronger US dollar. Consequently, our operating revenue grew by over 35% year-on-year at rupees 127 crores. With Pentonic continuing to grow and plans for introducing new products in the Pentonic stable, we expect strong top-line growth in the coming quarters as well. I'm happy to share that in line with our focus on brand building, we have launched the campaign for the new Pentonic BRT ball pen, which is being played at T20 World Cup over Hotstar. In the popular segment of writing instruments, more specifically the pen segment, the company continues to have a strong presence with a market share of about 8%. Company's focus on rupees 10 plus segment of the market since the launch of Pentonic brand has helped the company grow at a faster pace. One of the USPs of the product, its perceived value due to its unique design, has gone a long way in establishing Pentonic as one of the strongest brands in its segment. In over 3 years, Pentonic now contributes around 30% of company's core revenue, as against less than 7% in FY19 when it was launched. Due to higher GPM of over 40% in Pentonic series, the company's average GPM, which was below 22% in FY18, has steadily increased to 30.5% in Q2 FY23. Increase in selling price of our legacy products, strengthening of the US dollar, and the rationalization of polymer prices during the period resulted in this sharp increase in operating margin. Export contribution increased to 22% as against 18.7% in the same quarter of the previous year. The Japanese yen depreciated against rupee by around 7.5%, which resulted into reduced procurement cost of Uniball products which we distribute in India. Consequently, the gross margin improved from 25.4% in the first quarter of this year to 30.5% in the current quarter. Operating EBITDA margin also increased sharply to 12.3% in the quarter as compared to 8.2% in the first quarter of this year and 8.1% in the Q2 last year. The price of key inputs, which had peaked in the earlier quarters, have since rationalized, are expected to remain stable in the coming quarters. This, along with our continued focus on higher margin products, the Pentonic series, should help us in growing our profits in the coming quarters as well. Linc 2.0. With the 5-pronged strategy that we have embarked upon, as was discussed in our previous call, we believe the company will not only grow rapidly over the next few years, but will also be able to expand its margin with judicious product mix and economies of scale. Let me reiterate the 5-pronged strategies adopted by the company for your ready reference. The first one, increased touch points. India has over 10 million non-stationary outlets, likes of kiranas, medical stores, Pan Plus stores, etc. And from nowhere in FY20, the company has reached to almost 1.4 lakh such outlets directly, thus taking its total touch points to over 2.35 lakh outlets. The company expects to expand its overall reach to more than 5 lakh touch points by FY25. The second is the focus on higher margin products, and as informed earlier too, our focus continues to be on the higher value and higher margin products. We will soon be launching pens at rupees 20 and rupees 40 under the Pentonic portfolio. The third is the inroads into stationery products. Companies foray into the full range of stationery products through an exclusive tie-up with Delhi is progressing well, and we expect to generate a minimum of rupees 100 crores of revenue in 3 to 4 years' time. In fact, we have already done a top line of about rupees 11.5 crores in the first half of the current year and are well on way to cross rupees 30 crores top line in the current financial year. The next one is the stepping up of the existing capacity. And to meet the targeted demand, we are planning to increase our manufacturing capacity at Gujarat by putting up an additional manufacturing facility adjacent to our existing factory. On the ESG front, the company has taken the following initiatives. Number one, substituting plastic wrappers with bulk packing in paper boxes. This initiative saved about 60 tons of plastic in FY22. The next is we employ more than 1,200 female workers in our manufacturing facilities. We also employ and provide training to a small number of specially abled workforce. We also support several NGOs who provide education to the less privileged sections of the society. The company is also actively working on projects like recycling used pens. Consumers are encouraged to change the refill rather than buying a new pen under its Refill More campaign. These efforts should go a long way in contributing towards reducing the carbon footprint of our planet. Thank you. And now I would like to hand over the call to Mr. Dujari, our Director of Finance, to provide updates on financial numbers. Thank you once again.
Thank you, Mr. Jalal. Good afternoon, ladies and gentlemen. Many thanks for joining the Q2 FY23 Linc Limited earnings Concall. I will give a brief overview of the financial numbers for the quarter before we open for Q&A. During Q2 FY23, the company's operating income grew by over 35% from rupees 94 crore in Q2 FY22 to rupees 127 crore. The company launched the Pentonic series of pens in FY19. The significant higher margin profile of this series, coupled with minimalistic contemporary looks, resulted in top line and bottom line improvement since the launch, and the company achieved sales of rupees 397 crores and operating profit margin of 24.7% in FY20. Post FY20, COVID slowed down the momentum. However, with significant increase in Pentonic share in the portfolio, increase in selling price of its legacy products, rationalization of input prices, and strengthening of US dollar, the company achieved record revenue and profits in the current period, with operating profit margin crossing 28% in the first half of FY23. Q2 FY23 profit after tax stood at 9.6 crore, up from rupees 3.6 crore in the same quarter of the previous year. Q2 FY23 EPS stood at 6.43 versus 2.41 in the same period last year. Company continues to use its free cash flow judiciously, and in the process has been able to reduce its net debt significantly over the last 4 years. From a net debt of 62 crores in FY19, the company is now debt-free, with free cash flow of over rupees 8 crore as on 30th September 2022. Company is extremely focused on using its resources judiciously, and hence has embarked upon a modular expansion plan in Gujarat. While the basic infrastructure is being created to double its capacity to 20 lakh tons per day, some critical equipment and machinery will be added in modular fashion in sync with the demand needs. While the total cost of the project is expected to be around rupees 50 crore, the first phase of the expansion, which will increase the capacity by 5 lakh tons per day, will cost only rupees 35 crore and will be operational by Q4 FY24. The expansion will be largely funded by internal accruals. On the back of expanded capacity, the company is revising its guidance upward to achieve top line of over rupees 650 crore by FY25, with a CAGR of over 22%. During this period, the share of Pentonic revenue is expected to grow to over 32%, while Delhi is expected to contribute over 10%. We expect to achieve an annual operating EBITDA margin of around 14% by FY25. With low cost modular expansion and judicious use of debt, we also expect ROE to cross 20% by FY25. We continue to remain focused on our long-term goal of sustainable growth, profitability, and strong deleveraged balance sheet. With this, I leave the floor open for Q&A. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Himanshu Upadhyay from O3 Capital. Please go ahead.
Yeah, hi. Congratulations on great set of numbers. So I had a few questions on Pentonic. Okay, it seems it will cross 100 crores of revenue, the brand, this year, and slightly more also in this year. My question was, we have for DRT we have increased realization from 20 rupees to 25 rupees. Okay, and even the 10 rupee pen. Okay, so what is the
BRP?
The realization has been, or the selling price has increased, MRP, from 20 to 25 rupees. Okay.
Not really.
Okay. Because at some of the retail channels, it seemed we have increased the MRP to 25 rupees.
Not really. The Pentonic BRT remains at 20 rupees. So we need to investigate that. But it's sold at 20 rupees. It's printed 20 rupees and sold at 20 rupees generally.
Okay. And even the 10 rupee price point, we have not changed anything.
Still at 10, yeah.
Okay. And see this one.
The Pentonic prices have not recently changed. Not for last 6 to 9 months.
Okay. Okay. Because at some of the retail channel, I was trying to check local shops. It seemed, yeah. So I may have a wrong notion of the thing. Okay.
Must be some very one-off case, but generally retailers also try to sell at competitive prices. So this must be really one-off case. But
okay.
Yeah.
And this 25 rupees and 45 rupees price point, what we are trying to, it has taken quite some time for us to launch the product, okay? And it has been under our thought for some, at least more than 9 months, okay, now, 9 months to a year. Why is it taking so much time, and what are the thoughts we are having on that 25 rupees and 40 rupees pen?
Okay, so let me explain for the benefit of everybody. Currently, our Pentonic portfolio consists of a 10 rupee ball pen, which is our classic ball pen, which was launched in FY19, and then we also have a 20 rupee ball pen BRT, which you said that some shop selling at 25, which must be really a rare case, but generally it's at 20 rupee and advertised accordingly. And so that's our second product. Then the third product which we have is a Pentonic gel pen, which is at 10 rupees. So these are the three products currently we are selling. Then we are on the verge of launching a 40 rupee product, which the launch got delayed beyond our expectation because of fine tuning of the quality. So which would be launched latest by next month. And of course we already had a test launch of that product in Kolkata, and we had a very good feedback. So we are waiting for the the final commercial launch, which will happen in December. And you are right that this launch was delayed. And then apart from that, we have a few products in pipeline, which we intend to launch next year. So we have a product at 20 rupees, then we have a product at 30 rupees, and then there are more products at the design stage. So we don't like to launch products very often, so because we want to give adequate time to a product already launched, so that so we like to give some considerable or reasonable gap between another product. So this is the status of Pentonic. And of course we continue to grow the capacity of our Pentonic classic ball pen.
Okay. And on the Linc side, are we launching any other products in
Yes, certainly. So we have we intend to launch a 10 rupee gel pen in Linc portfolio. That would happen sometime in the either in the fourth quarter or in the first quarter of next financial year.
And one thing, we have seen a significant price increase for various products, okay? How is the competitive scenario evolving, okay? And are we, so let's say the growth what we are seeing, how much is because of increased volume which is happening across the board, okay? Because now most offices have started opening, or every office is now open. So what would be the share or because of increase in gain of our market share versus, and again, market itself growing? Can you elaborate on that? And are you seeing consolidation or any form of that happening, and peers increasing their prices for low-priced products?
So, of course, as you rightly said, that there has been price increase across the categories, not just the pens. So, a 10 rupee pen has become a 12 rupee pen, or a 15 rupee pen has become a 20 rupee pen, and so on. Or a 3 or 4 rupee pen has become a 5 rupee pen, and the 5 rupee pens have gone up to 7 or 8 rupees. So there has been overall price increase, and fortunately for Linc, we also had to increase prices of our legacy products, and fortunately for some of our products, the price increase has been accepted. Yeah, although not for all, but for all the large volume products, the increased price has been accepted, and that is one of the reasons that our gross margin improved, considerably in this quarter. And of course, COVID is past now, and we are back to normal. And I like to just share that the pre-COVID year, which was FY20, so Q2 revenue for FY20 was 23% lower than. So basically, we grew over by 23% in this quarter compared to the pre-COVID same quarter. So which means we are now, we are on a growth even over pre-COVID period. So yeah, so I think we are back to better than normal now.
And one last question. We spoke about making people realize or reuse the pens and buy refills, okay? But what I have seen is a lot of retail channel is not very convinced on that, or they are not ready to, because what they make is very less, okay, 1 rupee or even less than 1 rupee in some of the refills, okay? They are not ready to hold on to those refills, okay? So you may even be able to convince the customer, but how are you able to convince the retailer or distributor? Because I have been using your Pentonic DRT, and trying to get a refill in a Bombay also is very tough. Okay.
Oh, really? So that's a good feedback, Himanshu, because we encourage sales of refills because of the environmental reason, and of course commercially we have a very good margin even in the refills. So that is another reason that we promote the sales of our refills. And just for your information, about for every 10 pens sold, we sell about 2 refills. So that's like a all India average. So maybe in some territories it may be lower, and some territories it may be higher. So there is still some percentage of refill sales, spare refill sales for whether it is Pentonic ball pen or a gel pen or a BRT or even a Linc product.
A retailer margin for both refill versus pen, so let's say in percentage terms?
It's similar. Yeah, maybe 5% lower than the pen margin, but not very far off.
Because generally what I have found is retailers, or the feedback from retailers is, because if you are not able to sell the refill dries up, okay, and already the margins are less, and if
so they don't want to stock the refill so much. So Himanshu, I really appreciate this feedback, and we will work on it. At least so that they at least stock 10 to 20% of the refills.
Okay. Thank you. I'll join back in the queue.
Thank you, Himanshu.
Thank you. The next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Hello.
Yes, Mr. Podar.
Yeah, hi. Thank you very much, sir, for the opportunity. So I just wanted to understand in terms of outlook that you gave. I mean,
Sorry to interrupt, Mr. Podar. Sir, you're sounding very soft. Can you speak a bit louder?
now it's better.
Much better. Thank you.
Yeah, it's better now. Yeah.
So I just was trying to understand, I mean, a 25% kind of a growth, whereas first half you have already grown by about 50%. So what does that mean? I mean, in the second half, we are looking to see muted growth on a YOY basis. Yeah.
No. Yeah. So, see, generally, because of the seasonality factor, we always consider YOY growth.
Mm-hmm.
So, the YOY growth, as I mentioned, while, you can see, YOY compared to the previous year, there has been a growth of about 35%. Whereas, if you even compare to the pre-COVID, the growth has been about 23%. So we can expect, similar growth, YOY in the coming quarters as well.
Okay. No. So if I have to take the entire first half, our YOY growth is about 51%.
No. Is it? Okay. Okay. So that's actually, I'm always comparing with the pre-COVID. So yes. So you must not expect 51% growth in the second half YOY, because the first quarter in the last year was COVID affected. So it would really not. So it would be actually we have that's why we have not really highlighted that we have grown by 51% in the first half.
Yeah, but it's 35% growth that we did in second quarter. So that is one can look at going forward on a YOY basis.
Yes. So as I said that anything around that we can always expect.
Fair enough.
Yeah,
understood. And what about the margin sustainability? I mean, currently I think 12.5% margin, right? I mean,
so that's like EBITDA that we are talking about, right?
Right.
Yeah, yes. The EBITDA margin, yes. So as I explained that currently, so this is frankly speaking, this is the ideal margin we should be having. But if you look at couple of previous quarters, the EBITDA margin has been subdued. That was mainly because that there had been unprecedented hike in the most of the inputs, so which have been now stabilized, and we expect them to remain stable in near future. So we can expect a similar margin.
So 12.5% is what a stabilized EBITDA margin we can expect in coming quarters, right?
Yes, right. Yeah.
No. You did mention that the improvement was on 2-3 factors of increased ASP, the polymer prices rationalization, and the yen depreciation, right?
Yes. So yeah, all these 3 factors to me in the near future seem to be continuing. Yeah.
Continuing, right. So there's fair enough. Okay. Yep, that's it from my side, sir. All the very best. Thank you, sir.
Yeah. Thank you, Mr. Podar. Yes.
Thank you. The next question is on the line of Pushkar Jain from Sequent Investments. Please go ahead.
Hi, sir. Congrats on a good set of numbers. Can you quantify the amount that we got benefit in relation to depreciation of Japanese yen and the export?
About 75 to 80 lakh rupees. So this actually you can consider as a exceptional benefit, although I foresee that Japanese yen continues to be weak against rupee and the dollar. So in the near future, we will continue to benefit to that extent
Okay. So yeah, this will be continuing unless
it takes a U-turn, because Japanese yen has been very, very unproductive sometimes.
Right. And do we have some hedging policy for this, or it is usually mark-to-market?
Generally,
something like that.
Generally we don't hedge because
yen actually is the two-way currency, so the cost of hedge is quite high in yen.
Okay. And for the exports?
For exports, we keep it open and we borrow in PCFT in foreign currency. So and we have got an equivalent import. We have imports, so there is automatic hedge.
Right, sir. And on the capex front, then what will be the production capacity that will be operational in Q4?
5 lakh tons.
Yeah, so we're installing a capacity of 500,000 pens a day. This will be operational next financial year.
Okay, sir. Okay. And the last question, if I may. So we have seen obviously September is a seasonal quarter and we have to see YOY, but the margins that we have posted have been 12%. We have never reached, even in March, from March 17 to March 22 on a full year basis. So what is the guidance on full year basis? What has changed for the company actually that you can tell me about?
So
apart from these two changes.
No, I think I'll repeat it again. Of course, the one reason has been that the prices of our legacy products were increased in the first quarter. So consequently, the margins significantly increased for our legacy products. So that helped us in our average, the average GPM. That was one reason. The second reason, as I said, that the input costs, which were unprecedentedly high in few previous quarters, that also stabilized or rationalized. So that also helped us improve our gross margin. And I think the most important is that as the contribution of Pentonic portfolio increasing in our overall portfolio, the gross margin improved, which will continue to happen because Pentonic series has a better margin, much better margin than our legacy products.
Right, sir. And for H2, we can expect similar margins in a ballpark range?
Yes, definitely. This is what we are expecting, and I'm saying this is actually the ideal, at minimum ideal margin.
So the H2, 12%.
Yes, right. Yeah. Yes, of course.
Thank you so much. That was very helpful. Thank you so much.
And another reason was, of course, the US dollar also became strong against the rupee. So our export realizations also became better.
Right, no, that I got. So I was 75-80 lakhs benefit we got because of the Japanese hedge, and I'm assuming another 30-40 lakhs because of the US dollar. But still, apart from that, on a 15.5 crore EBITDA, still the margin is exceptionally high, right, compared to the previous years. So that is why that is the question.
Yeah, you're absolutely right. So as I said, that is because of the contribution of Pentonic.
Right. So 10 to 12% margin you can expect for the remaining quarter.
Yes, certainly. This is a benchmark now for us.
Okay, thank you so much, sir.
Thank you. The next question is from the line of Devesh Srimali from DS Investments. Please go ahead.
Yeah, hi. Thank you for the opportunity and congratulations for good number. I just wanted to, one question was more around the guidance you called out. See, we are currently at about 125 quarterly run rate, which translates to about 500 crore annually. And we are sort of calling out 650 by 25. I just wanted to understand, you're being conservative, or are we missing something here in terms of 23, 24, 25? Just trying to see the growth pattern.
So Devesh, actually we are trying to be conservative.
Okay. Fair enough.
I don't know whether it is right or not, but this is what we are trying to.
Yeah, I appreciate
So
it.
So that is the minimum. That is the least which we expect to deliver.
Sure. And secondly, I wanted to understand if you could talk about a little bit industry structure and competitions, which is either locally or imported. And because I think we're around, you called out 8% market share, right? So how do you see our market share evolving from here to next 2-3 years, and competitive landscape? How has it changed? Just qualitative remarks would be useful.
Yeah. So of course, let me admit that the industry is quite fragmented, as it's a low entry barrier industry or the category. There are a couple of brands which are popular, and I don't mind mentioning them. So there is a brand called Cello, then there is a Flair, then there is a Renault it's a foreign brand, Renault from France, and so there is a Rorito. So these are the national brands which I mentioned. Apart from that, there are some regional brands also. So it's quite a fragmented industry, and the industry growth rate is expected or estimated to be around 6% or so, plus minus. Yeah. So I think, of course, currently the share of below 10 rupee products is quite high, and which has been for many years. And what we are trying, but as you know, that the below 10 rupee price segment has a very low profitability. So there is a very little scope of marketing those products. So our focus has, and of course, as a legacy, we were in the below 10 rupee products only. So that was the reason that we were not, because of the low profitability, we were not able to deliver decent, EBITDA margin. So since Pentonic was launched in, FY19, so from FY20, every quarter there has been improvement in the top line as well as in the bottom line, of course, which was interrupted by 2 COVID-affected years. So, and we are able to invest, since we have adequate margins, we are able to invest in the brand, we are able to invest in the distribution, of Pentonic. So, even though the industry growth is only about 6%, we are, able to acquire some market share of our competition, and that is the strategy, we are having.
Great. Thank you for the detailed answer. And one last one would be, if we, look out 2, 3, 4 years down the line, how do you see non-pen revenue shaping up? I know you have called out about 100 crore, but from your ambition perspective, do you see it growing faster than the pen line, and how far it can go to?
So of course that is a conservative number again, but frankly speaking, since we do not have much experience of selling products other than pens, we took a conservative target, which is also not so conservative, but I think this will be too early to change our guidance for the non-pen category, but definitely every quarter, we will review the guidance, and if necessary, we will revise.
Sure. No, I didn't mean to necessarily, put a number on the table. I was trying to understand that, if we were to say future growth, The core driver is one is Pentonic, which is N plus market share, and the third would be the stationery piece, right? Because this has to ramp up, right? Okay.
Yes, sure.
So right now it's about you called out that it's about 30 crore this year, so it's probably 100 crore. I'm not again putting numbers. I'm just trying to say that even further down the line, you are open to take this share in the overall revenue mix much higher. You are comfortable around that strategy, right?
Yeah, definitely, yes.
Okay, great. Thank you for the answers. All the best.
Thank you, Devesh. Yeah.
Thank you. The next question is from the line of Zakir Nasser, an individual investor. Please go ahead.
Hello.
Hi.
Hello.
Hi.
Good afternoon, Deepakji, and congratulations on the blockbuster performance this quarter, sir. And best wishes to Team Linc, sir, and my regards to Jujari also. Sir, in terms of the seasonality of your business, sir, you see lot has changed in the retail after post-COVID. So do you feel that our traditional good quarters or the nature of seasonality has changed in your business, sir? I would like to know.
Actually, we were expecting this to change during these 2 years of COVID, but once the COVID is over, I mean, we found that that seasonality factor remains same, more or less same.
Okay. But you don't find any shift like more sales during the off season and stuff like that, sir?
Not really. So, not really. We have not experienced that. More or less, we are experiencing the similar pattern.
And Deepakji, about the previous question about your non-pen exposure, so all your non-pen sales, with your fantastic reach and your number of touch points, what are your broad thoughts about that, sir?
Even though we are on record, I would like to make this statement that the potential of the non-pen business, which is stationery, is as big as the pen category. But it's just that we are new in this category. It's not that we are going cautiously. We are putting all our efforts, but it takes some time to really scale up. But you can understand our ambition that the stationery category is much bigger than the pen category. So we have such ambition.
Fantastic, sir. And sir, with a normal growth, could we hope to cross the magic 500 crores mark this year?
So Jackie, that is our endeavor, and we definitely would be very close to that. Yeah, and of course, we are increasing our capacities and doing all our bit to reach that magic number.
Fantastic, sir. Best wishes for the year, sir. Thank you.
Thank you so much. Yeah.
Thank you. The next question is from the line of Kiruba Shankar, an individual investor. Please go ahead.
Hi. Congratulations on a great set of numbers. Very encouraging. I just have a couple of questions regarding your strategy with respect to products. Like, are we selling backpacks now? I see this on our Amazon storefront. I see 2 brands there.
Actually, not. It must be some very small initiative by our e-commerce team, but it's not in our main product line yet.
I mean, do we plan to like scale it up if it works out? Like, what is the roadmap for that?
So, frankly speaking, backpacks is not in our scheme of things, at least in the near future. But you never know. Once we have stabilized with the stationary penetration, we could always look into it. But right now, there's nothing such in the pipeline.
Okay, thank you. My next question was regarding.
Sorry, it becomes a different ball game altogether. Selling backpacks is not like selling other stationery products or pens. So it's a little different ball game. So we don't like to, get into that right now.
Okay, sure. Also, regarding Pentonic, can you give us a split with, I mean, not just Pentonic, regarding pension, can you give us the split with respect to selling price? Like, how much of the premium, like 20 rupee and above products are we able to push? And what is the percentage the overall mix right now in terms of volume?
Oh, that's too much of a detail, though. Yeah.
No problem.
But as I said, that currently about 28%, value contribution is from Pentonic in our overall revenue.
Okay. No problem about that. My main question was regarding our bold initiative of going to the Kirana stores. Like, how has that panned out? Like, do you have numbers which can say the split between Kirana stores and other stationery outlets for our current quarter?
So, Mr. Shankar, it's there in the presentation, but let me admit that
Revenue breakup is not there.
Yeah, revenue breakup is not there. Yeah, but let me tell you, it's too much of investment and to expand this channel, and the cost to sales is also very high. But fortunately, we are able to afford that since we have better margins in Pentonic. But I think it's a long haul. I mean, it's not as easy as we had envisaged when we took this journey. But definitely, as we have mentioned, that by 25, we expect to reach more than 500,000 such outlets. And so I think it's a little early to really talk much about this. But currently, the revenue contribution is not so significant, and I don't have that figure handy. But yeah, this is the overall situation.
Okay, no problem. And my last question was regards to exports. What is our strategy with respect to exports with respect to developed versus developing? Are we specifically looking at a certain set of countries where we get higher margins? What is the strategy there?
So certainly the strategy is, of course, first of all, we look at the countries which are highly populated, and the second is the priority. The second priority is the countries which are closer to India. So countries like Indonesia, Thailand, Myanmar, Vietnam, those are of priority to us. Apart from that, countries in Africa. So Africa is also, a target market for us, and we sell to several African countries. Realization is more or less same, whether it is in Africa or in the markets near to India. So fortunately, we are able to have better margins than the domestic in export market. And as you may be knowing that we export to more than 40 countries, and our focus, of course, is on countries which are highly populated, as I said.
Okay. Also, in India, we have a very strong market position in a couple of areas, but in the south and the west, we don't have that much of presence. Can you give us a split on how we are growing in south and west versus east and north?
So Fortunately, we are actually growing faster in the south and the west, mainly because we had a low base there. So, before Pentonic, the contribution from west and south was less than 20%, but today the contribution has increased to 30% because of Pentonic. Because Pentonic is sold across, across the region, across the country. Yeah.
Okay. Yeah. Thank you and all the very best. Like very interesting things going on. All the best.
Thank you. Thank you, Mr.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. As there are no further questions, I now hand the conference over to Mr. Deepak Jalan for his closing comments.
So I would ask Mr. Sanchetti to make his closing remarks.
Thanks a lot, Naveen. Thanks everybody for joining this call. Really appreciate doing that while the cricket match is on. If you have any further questions, please feel free to get in touch with Mr. Gujari and the investor relationship team at Linc. And thanks once again and all the best.
Thank you.
Thank you. Ladies and gentlemen, on behalf of SKB Securities Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.